In this video, I am going to tell you how buyers are unintentionally defaulting on their home purchase contracts and losing thousands of dollars in earnest money and pre-closing expenses. And I'm also going to tell you how to make sure this does not happen to you. So picture this. You're going along with your home purchase. You've put the house under contract, had your inspection done, negotiated repairs. Then you get the great news that you're approved for the loan and the house is appraised. All is moving along quite nicely until you go to get your insurance set up as a final condition from the lender, only to find out it is way more than you expected to spend. So you send it over to your lender, and your lender now says you don't qualify for the loan anymore, which means you can't get the house. This is happening every single day. Don't let this be you. All right, so you've probably heard or even seen it yourself on your own bill. Homeowner insurance has been skyrocketing lately. Just take a look at some of these headlines. U.S. home insurance premiums may hit a record this year. Homeowners insurance costs are going through the roof. The home insurance market is crumbling. Home insurance is so pricey, people are moving. And this is not all of them. Over the past years, we've seen a significant increase in insurance premiums. According to the Texas Department of Insurance, the average homeowner insurance rate increased 21.1% in 2023. To give you a look behind the scenes on how insurance costs are calculated, insurance companies look at your personal risk factor and how much they spend on all claims. So on a house, they'll look at the home's age, the roof age, the house's construction material like brick or siding, where the house is located, and the cost to replace the house. They'll look at your claim history and the claim history on the house and your credit score. Insurance companies also look at inflation costs, since that increases the cost of building materials and construction labor. They look at weather events, so think freezes, hurricanes, hailstorms, tornadoes, wildfires, major thunderstorms, and more. Then there's this other expense insurance companies have called reinsurance. This is a form of insurance for insurance companies. They buy this to help spread their risk and be financially stable if a major disaster occurs. And these higher reinsurance rates get passed along to customers. So that's what they use to determine a rate. Now let's look at what has been happening lately. We've had an increase in natural disasters like hurricanes, wildfires, and floods. Insurance companies are paying out more claims than ever before. This increase in claims results in higher costs for everyone. We've had rising construction costs. The cost of building materials and labor has gone up, making it more expensive to repair or rebuild homes after damage. Insurance companies pass these costs on to homeowners. And again, we're having higher claim frequencies. More frequent claims, even for smaller incidents, can all drive up the overall cost of insurance for everyone. These factors combine to create a perfect storm, leading to higher premiums for homeowners. Now here's the kicker. We've had this increase in claims lately, and claims can stay on a house's record for up to 7 years. This means if you're buying a home that had multiple claims in the past, you could end up paying even higher premiums, even if the claims were made by the previous owner. Insurance companies use this claim history to assess risk, which directly impacts your insurance costs. But this is a critical factor on insurance that so many sellers don't think to mention and so many buyers don't think to ask. If it's even thought about, the assumption is that our seller's disclosure will provide that information. Now, this is one of the disclosure forms used in Texas. So if you're in a different state, it will be different for you. But if you're in Texas or looking to buy a home in Texas, you will definitely want to pay attention to these sections. This is what the seller is supposed to fill out as part of the purchase contract. There's a section that asks the seller if they've ever filed a claim for flood damage to the property. Then there's a section that asks the seller if they've ever filed a claim for damage other than flood damage to the property with any insurance provider. Now, these are very small and often overlooked by both buyers and sellers on the form. But a critical piece to consider on this as well is this only asks if the current seller has filed a claim. What if they've only lived in the house for 2 or 3 years and the previous owner filed a claim 4 years ago? How are you supposed to know that? And no one has to tell you. So how can you know the insurance history of a house you're under contract to buy? Well, this is where a CLUE report comes in. CLUE stands for Comprehensive Loss Underwriting Exchange. It's a database that tracks the insurance claim history of properties and individuals. A CLUE report will show you any claims made on the property in the last 7 years. Now, this is crucial information because it helps you understand the potential risks and the likely costs of insuring the home. This is something your insurance agent has access to. If you have an insurance agent you're currently working with, they can provide it to you, and it will often come as part of a quote for insurance for you. If you don't have an insurance insurance agent you're working with, let your realtor know, and they will connect you with some providers who can help. And that quote for insurance, that's actually the big thing you need to get. But I like that clue report too, because it also lets you know if something wasn't disclosed that maybe should have been. Now, here's the most important part of this whole video. So come back to me if you're multitasking right now. Timing is everything when it comes to getting insurance quotes. The best time to start shopping for quotes is during the due diligence phase or the option period of your home buying contract. This allows you to compare multiple quotes and ensure you are getting the best rate possible. It also allows you to know early on if insurance will be an issue for your loan approval. And here's a pro tip for you. Get at least 3 quotes from different insurance companies. You would be surprised at how wide a variance you get in numbers. This gives you a good benchmark and helps you understand the range of premiums you might be facing. Once you have your insurance quotes, it's important to provide those rates to your lender well in advance of your financing approval deadline. Your lender needs this information to finalize your loan terms and ensure everything is in order for your closing day. Delays in providing this information can lead to last-minute hiccups, so be proactive and stay ahead of the game. Here's why this timing is so critically important. In Texas, if you are using financing to purchase your home and your contract is contingent on financing approval, this is where you can get tripped up if your insurance quotes come back too high and exceed the debt-to-income ratio allowed by the loan for you. So this provision states, quote, if buyer cannot obtain buyer approval, buyer may give written notice to seller within blank days after the effective date of this contract, and this contract will terminate and the earnest money will be refunded to the buyer. If buyer does not terminate this contract under this provision, the contract shall no longer be subject to the buyer obtaining buyer approval, end quote. So in this blank, we typically see anything from 10 to 21 days. And this means this is the amount of time that you, as the buyer, have to back out of the contract if, as the buyer, you don't get approved for the loan. Now, here's what happens so often. A buyer generally waits till about a week before closing to get insurance quotes. But at that time, you're probably 21 plus days after the effective date of your contract, since most closings take place 30 to 45 days after going under contract. So if those quotes come back too high and the cost of owning that home now puts you outside of your allowed debt to income limits, then you will get declined for the loan. But you're now outside of your window of when you could back out of the contract because you were denied the loan. And because of that, you put yourself in a position to be in default. And when you're in default, you put yourself at risk of losing your earnest money. But not only your earnest money, at this point, you've spent $500 to $750 on an appraisal. You've spent $500 to $1,000 on an inspection. You've maybe even spent $500 to $1,000 on a new survey. Then there's the cost you paid for the right to even have an option period that you've now lost as well. So this is not a cheap oversight. Now let's say you got your quotes and you got these during your option period, or some of you might call it your inspection period or due diligence phase. And those quotes come back so high that you do indeed get declined for the loan. Well, do you have to automatically scratch that house and start all over? Not necessarily. The good news is that you obtain this information while you are still in the negotiation phase of your contract. Again, timing is everything. And if the seller wants to sell, chances are they'll work with you on this because it's going to be the same issue for the next buyer too. High insurance costs can actually be leveraged in your favor during negotiations. If you discover that the home you're interested in has a higher than average insurance premium due to past claims or other factors, you might be able to use this information to negotiate a better price or request concessions from the seller. But before you just start asking for money, find out specifically from your lender what needs to be negotiated so your debt to income can be brought back down to an allowable ratio. So the takeaway from this video is to get those insurance quotes super early on. Now, as you can see, there are many moving parts when it comes to buying a home. This is why working with a seasoned real estate professional is so important. There are countless odds and ends to remember and to keep track of, and these are things you don't know if you haven't been in a situation where you needed to know. This insurance phenomenon pretty recent. Most people buy and sell homes only once every 7 to 10 years, so it's not something you deal with regularly. But when you work with an experienced agent, you have someone on your side who's been through this process many times and knows how to navigate these complexities. They can guide you, provide you valuable insights, and help you avoid costly mistakes like this one on insurance. And if we haven't met yet, I'm Jennifer Shannon. I'm a realtor and broker associate with the Crestage Group at Keller Williams. I've had my license since 2006, and I have seen a lot in the world of real estate. I thrive on providing valuable real estate advice and data, the kind of advice and data that comes with experience. Our group knows that when you're starting the process of buying a home, selling a home, or relocating to the DFW area, you want all the data, all the details, and want to feel well informed about the process. You're on multiple sites, multiple apps, just soaking in all the information you can get so you can feel confident that you're making a smart decision on your move. Well, we get you, and we want to be your real estate resource of choice. It's why we provide videos like this one to make sure you're getting answers to all the questions you might have about the market. So if you're looking to buy a home or sell a home, let's chat. You don't even have to be Dallas or Texas for me to help you. We're part of an international network of real estate agents where we can verify production and vet top performing agents to make sure you're working with a savvy professional in any metro. Just go to getstarted.thecrestagegroup.com and click on the button that says click here to get started. Then just tell us how to contact you and we'll take it from there. Or simply reach out by phone or text to 214-803-4444 or start with an email to me at jshannon@kw.com. If you found this video helpful, remember to give it a thumbs up and subscribe for more real estate tips and hit that notification bell to stay updated. And be sure to check out another video on this channel, like this one.